Hello everyone, it is Sunday, December 5th, and this is episode 40 of Odds Are, your S&P 500 weekly market forecast. All right, let's take a look last week. That was a fun one, huh? A lot of red, but also mixed in with some green in there. Just kind of choppy, plenty of volatility for all. But overall, we did have a breach of the breach points as we expected. So we breached the 45.24 lower breach point, and we did stay within the expected settlement range. So we closed between 44.54 and 46.60. Didn't come anywhere close to the 43.11 parabolic SAR down there in the yellow, but that's no surprise. And we did kind of push that Bollinger Band. We really stretched it to the downside, but look at the top. It also stretched to the top side because the Bollinger Band is expanding to accommodate for that extra volatility that's going on right now. Then we have the midline kind of curving to the downside, which that's interesting as well. And, we're going to actually talk about that when we look at what we're expecting for next week. But before we get into that, let's take a look at the moving averages. All right, your moving averages, bearish now on the short term. Not much, shouldn't be a surprise, really. I mean, looking at last week's performance, we are bearish on the short term, but look at the actual medium term. Still bullish, not neutral yet. And that's because the downward move was so sudden, so quick, that it has not yet caught up to the medium term. But unless we have a very, very robust rebound, like almost like a V straight up next week, that medium term, I see it turning neutral next week, regardless of whether we stay, slightly positive, slightly negative, or, neutral on the week. We're still going to have that medium term flip, like I said, unless we have a very, very strong upside move. But that should be flipping neutral soon, and long term, I would not expect that to flip anytime soon, just because that, now you're looking at 50-day versus the 200-day moving average. So still expecting that to stay bullish into next week. All right, so what are the prices we're forecasting for next week? So we are looking at 81.31% chance that we will breach either 44.59 on the downside or 46.37 to the top side. Notice how the 46.37 is actually above and outside of the expected settlement range, so it's above that 46.10, which is interesting because we would have to, breach above 46.37 and then come back down below 46.10 for both of those to be correct, which actually is not unlikely, and I'll explain to you why here as we get into next week's relative view. But just to wrap up here, 44.06 on the downside expected settlement range, and the parabolic SAR did go up to 43.35. Still pretty far out of range, but trailing upwards as it does. All right, so let's take a look at what I was talking about on the relative view for next week. So you see that we have been really riding that lower Bollinger Band, the lower end of the blue shaded area there, and just stretching it downward. Now, that upper breach point, take a look at where it's at. It's literally 4 points below the red midline, which is actually at 46.41 right now. But that red midline, we've seen historically that when we have a very strong move to the outer edges of that Bollinger Band, it tends to rebound and test that midline, especially to the downside. So we'll kind of go up, test it, and then one of two things will happen. We'll actually, bounce off of that midline, head back down, and stay within that channel between the midline and the edge of the downward, the lower Bollinger Band, or we'll cross it and it'll continue its move back upward, and then that red midline becomes more like support. In this case, I'm looking at these breach points and I'm saying, hey, it's very possible that we're going to go back up because we have a tendency to test that midline. So don't be surprised, right? We're looking at 46.37 if we breach that and then still do close below that 46.10. To the downside, again, we could still push that Bollinger Band down, and both of these things could be true in the same week. We could actually go up, test the midline, and then drop like a rock again, right? So like that dead cat bounce where we go up and then we just keep dropping. Still do expect it to close within the expected settlement range above that 44.06 and below that 46.10. Not looking to close below that 43.35 next week. All right, if you didn't see that one coming. So I kind of touched on this a little bit in the, talking about the relative view for next week, but do not, again, I emphasize, do not be surprised if we go up towards that 46.37 and breach it, but then turn back down. So that we can close within the expected settlement limit, and we could still end up the week on a negative note, which, it doesn't make for a very happy holiday season, but the market's not in the, Christmas card business, or at least most of it isn't. So looking at these prices, don't be surprised, be prepared for that. We could have a little bit of a bounce up there, but overall things still have the possibility of getting pretty ugly, especially since we are now in that channel between the lower Bollinger Band and that midline. All right, and let's wrap up with the quote of the week, and this is by Mr. Paul Tudor Jones. If you don't know who he is, Google him. He has a very, very exciting story. He was there during Black Monday, and he's been very successful and hedge fund manager. Very interesting character. I'll just leave it at that. But Mr. Paul Tudor Jones, he says that the secret to being successful from a trading perspective is to have an indefatigable and undying and unquenchable thirst for information and knowledge. Now, I know that, a lot of you are obviously watching the video because you're interested in, learning something, whether that be just a tip for how you can make money in the market, or maybe you just want to learn more about trading, or maybe you're just bored. But the fact is, Mr. Paul Tudor Jones here, he touches on something very, very important, is that in order to be successful in trading, you have to, absolutely have to, have a desire to learn, right? And he uses a lot of fancy words here to say, but basically it's a burning desire, right? You cannot have enough knowledge and information. You are always learning. You're always pushing yourself to be better and to explore new ways on how you can find edges in the market or systems or strategies that can make you more successful as a person, as a trader, in your quest to make money, to avoid losses, to mitigate risks. Knowledge and information definitely are the elements there, and you have to always be in pursuit of them. So I take that to heart. I am always trying to learn new things. Hopefully you guys are as well. And you will reap the rewards, right? Even if you don't make money in the markets, it still makes you a better person for having that experience. So with that, I will leave you guys. Enjoy the rest of your week, and I will see you guys here next Sunday.